Of those themes and talk to Joshua Mahoney, who's Chief Analyst at Scope Markets. Good to see you as always, Joshua. I want to start with talking about gold and silver. They were at record highs, of course, then they plunged. Does that somewhat put in jeopardy this safe haven reputation they have if they can lose so much so fast?
Yeah, it's a funny one because in a way the safe haven aspect has sort of gone out the window for a while now because equity markets have been rising at the same time that we've been seeing the likes of gold and silver also pushing into record highs. It certainly hasn't felt that way for a while, but part of the narrative behind why people wanted to hold gold and silver was this idea of the de-dollarization, the idea that the growth in debt meant they're going to have to soon enough enact QE and devalue their currency even more. So instead of holding US dollars, which of course is a haven, people move towards gold and silver. But now we've got Kevin Warsh at the helm at the Federal Reserve, if he gets approved, but certainly has been nominated. And that sort of narrative, it feels like, has weakened quite significantly. That's why we're seeing a lot of that flow out of what was a very crowded trade to begin with.
So why does what happens at the Fed, a change in expectations around its independence perhaps, have such a big effect on what happens with metals prices?
I mean, look, well, the independence story, in actual fact, has gone kind of a different way from the way markets perceived it to be. In a way, if you're looking at, say, gold and silver, you're talking about again, a de-dollarization story and a loss of confidence in the currency that essentially many of these commodities are priced in. If we move towards a Federal Reserve chair that historically has been relatively hawkish, then suddenly that narrative that essentially Trump's going to appoint this massive dove that's going to ramp up QE and slash rates, that goes out the window. We start to see the US dollar appreciate, and suddenly all of those commodities that are priced in the US dollar start to roll over as a result. I mean, the caveat here is that we haven't actually heard anything from Warsh. We don't necessarily know that he's going to be this uber hawk, and people are looking back at previous comments, but personally, you know, if you look at anything that Donald Trump said and the way that he's treated Powell in the face of rate cuts, you know, you would think that he would feel pretty confident that Warsh is going to come in and essentially do his bidding. So I don't think it's going to be as hawkish as people perceive him to be.
Before we move on from gold and silver, just a quick prediction, if you will. Where do you think prices are going to go next?
It's really difficult because, you know, like your previous piece was alluding to, when you see factors such as the ramping up of the sort of CME margins and things like that, margin requirements, it almost forces people to sell. So they might have conviction of their position, but if they're in a sort of speculative leverage position and suddenly their margin requirements go up, they might get forced out of it. That, of course, drives prices lower. What's notable here is that we're seeing almost perfect inverse correlation between the US dollar and some of these prices, the likes of copper, gold, silver. And therefore, the question of where gold and silver goes now is almost a question of where does the US dollar go now. So I do think we've got a bit of a rebound in the US dollar. That points towards maybe over the short term a little bit more downside for gold and silver. But I guess soon enough it's probably going to be a case of stabilization as we start to really understand what the reality of it is with the Federal Reserve. And then over the long term, I do continue to believe in the long-term case for gold and silver. I think we'll probably get back up to the record highs, but, you know, it's going to take a bit of time.
So you don't normally think volatility when you think of gold and silver. Perhaps you do when it comes to Bitcoin, which has also had a pretty brutal week, hasn't it? Is this all tied up in the same thing?
Yes, from the perspective of that we're valuing it against the US dollar. It's an interesting one from the perspective of the whole de-dollarization, the whole fiat currency argument that, you know, you shouldn't put your money in US dollars or pounds or you name it because these countries are essentially going to constantly devalue their currency, print more of it. So what do you invest in? Well, you invest in Bitcoin, you invest in gold. But Bitcoin and cryptos haven't actually been involved in this recent rally higher for assets such as gold and silver. So they're kind of involved in it, they're kind of not. I think if you look at the big picture, Bitcoin has been declining since the end of that post-halving period. If you look at the 4-year cycle, it essentially peaked exactly when it should peak. That, in my mind, means we're probably going to see weakness for the likes of Bitcoin and like up until roughly October, if you look at that cyclical perspective, before it bottoms out. So selling pressure coming for many commodities. It's not a commodity, well, it depends on how you perceive it, but certainly I think it's just playing into that same narrative that is likely to continue up until pretty much the midterms.
Joshua, great to talk to you. Thanks so much for coming on the programme. That's Joshua Mahoney, Chief Analyst at Scope Markets.